Dan, I do want to start here with this idea that we've had, anytime you have a big rally, you're always going to have these daily pullbacks, even weekly pullbacks, if you will. That doesn't necessarily mean the rally is over. And I do wonder if you see enough fundamental case there for this rally to reset and continue.
Yeah, look, I view it as a bump in the road because it's our view, when you think about AI revolution, you're just continuing to get validation from earnings and from everything we see from the data center, as well as just overall demand. We'll see that from Godfather of AI, Jensen, NVIDIA, as we go into next week. And look, I continue to view this is a 1996 moment, not a 1999 or 2000 moment. And that's our view. I mean, this is a tech bull market that will continue to rage on in second half of the year into next year, given we're talking about a fourth industrial revolution that we're actually just living through.
When we talk about that fourth industrial revolution, everyone, of course, wants to know how that includes stocks other than, say, NVIDIA or Microsoft. I know we've talked about this before, the idea of the AI trade broadening. And it does appear investors are hungry for that, looking for who the next beneficiaries of this are going to be. Are they visible yet?
I think they're starting to be visible. I mean, we have our AI 30 list where we talk about the derivatives. It's not just, look, of course, it's led by NVIDIA, it's led by Microsoft, it's led by, big tech, Meta, and others. But now it's second, third, fourth derivatives. Nebius is a good example. You never would have talked about them a year ago. You look what's happening on cybersecurity. You never would have said it as an AI name, Palo Alto, CrowdStrike. You look on Palantir. 2 years ago, no one talked about it. A year ago, maybe, haters would talk about it. Look what's happened there. And the sell-off today, I just view as just a small bump in the road to what I believe is a $1 trillion market cap next 2 or 3 years. So my view is, and that was a great illustration what you talked about, it's going to spread. Second, third, fourth derivatives. And I always say, when the bears are in hibernation mode, they can see AI in the spreadsheets.
One thing that I found interesting about the rally, certainly this particular year that we've been in, is sort of the participation that we started to see amongst old tech companies. We talked a lot in the past on this program about Oracle. Today, we take a look at Intel, and I know Intel has a lot of issues. But to see not just so much the rally in the shares today, but the vote of confidence that Masayoshi Son and SoftBank had to put up $2 billion to invest in this company, do you think Intel is going to find a spot in this with AI revolution, tech revolution, whatever you want to call it?
Look, I think the problem is they're just years behind, right? In terms of, you look at what Intel has done the last few years, has been just a massive black eye. Now, clearly, like SoftBank vote of confidence, obviously U.S. government, that's a little, call it obviously a champagne moment today. But I just think this is an Everest-like uphill battle. They're years behind other competitors when you look at NVIDIA, AMD, TSMC. And I just think, look, there's a better chance of me playing Ryder Cup Bethpage in September than Intel catching these other chip players, and that's the reality.
So what do you think Intel can be, or more importantly, what do you think it will end up being? Does it get bought? Does it get chopped up and into different pieces, or does it just kind of wither on the vine and go away?
I think chopped up. It's going to have to be strategically split. I mean, that's our view. Look, I get right now you're talking about one of a core U.S. tech asset. You look at their customer base, but the reality is, like, market's telling you, I mean, of course you had today, but strategically that this is probably a company that's going to have to split up. I think that's part of the problem is that these tech companies, when you look at the ones that participate, they're so far ahead of the competition. And Intel, they've been on a treadmill, almost, 2.5 speed or lower.
A widespread tech sell-off is causing NVIDIA's stock to decline once further on Wednesday ahead of the company's earnings announcement the following week. In the afternoon, NVIDIA's stock was trading at $173.11, down 1.5%. Amidst a wider sell-off in highly valued technology businesses, the stock experienced its largest decline in months on Tuesday, falling 3.5%. Shares of NVIDIA are on track to have their first 2-week losing run since April. Technology investors may have been alarmed by OpenAI CEO Sam Altman's prediction of an artificial intelligence bubble, even if there was no clear cause for the decline. However, according to a Massachusetts Institute of Technology research, the great majority of businesses that have made investments in generative AI have not yet seen any returns. When NVIDIA releases their earnings on August 27th, that will be the next significant catalyst. Although there is some question regarding whether the business's financial projections would include sales in China, which require licensing permissions, and for the company to provide the U.S. government 15% of the revenue generated, analysts are generally optimistic about the company's expected prognosis. NVIDIA is expected to report another great quarter with high expectations. According to Ryuta Makino, research analyst at Gabelli Funds, the focus right now is on the Blackwell ramp and Donny updates on the H20 overhaul now that the export licensing limitations have been removed. The 15% rev sharing with the government may raise concerns about how it may affect final end demand. Wall Street is increasing its price objective regardless of the stock's most recent movements. With an overweight rating, KeyBank analyst John Vin increased his target price from $190 to $215. Joshua Buchalter, a TD Cowen analyst, maintained his buy rating on the company and increased his call from $175 to $235. In a research report, Buchalter stated, "We believe it remains the best and cleanest way to play AI, and we note NVIDIA is trading at a discount to Broadcom despite what we see as a cleaner setup. With a tilt toward the upside, we observe NVIDIA producing strong results that most likely meet investor expectations. As artificial intelligence use cases continue to grow, Wedbush analysts believe that NVIDIA's August 27 quarterly release will be the next significant catalyst for investors. According to the company, the market is about to embark on a multi-year AI infrastructure rollout, and the outcomes serve as a reminder of that cycle. Analysts predict that NVIDIA will announce earnings per share of about $1.1 on revenue of about $45.92 billion. Wedbush characterizes NVIDIA's recent decline as normal profit-taking, rather than a fundamental change, joining other high-beta tech firms like AMD and Palantir. As more businesses and governments set aside funds for AI projects, the bank predicts that major U.S. tech companies will account for the majority of this year's $350 billion in near-term AI capital spending. Wedbush refers to pullbacks as buying opportunities in IV's AI 30 constituents and core AI winners, which stand to gain from wider corporate adoption. Wedbush anticipates the tech bull cycle to last for several years, as long as expenditure on chips, software, and infrastructure continues, despite the possibility of short-term turbulence and lingering skepticism. For indications of durability, analysts will keep an eye on capital plans and guidance. Investors recently started to respond to NVIDIA's agreement to provide the U.S. government 15% of the profits from its H20 AI chip sales in China in exchange for a license to sell the chips in that country. Doug Jacobson, an international trade lawyer at Jacobson Burton Kelly, said that NVIDIA's revenue deal would draw attention, Barron's reported. Uncharted oceans are far away. Jacobson stated, "We're in an uncharted universe," adding that although the State Department can impose export license fees for defense technology, they are not derived from earned income. Former BIS senior advisor Aisha Hussein told Barron's that a fee structure like NVIDIA's would violate a law at the Bureau of Industry and Security, which oversees export restrictions. Additionally, Advanced Micro Devices and the Trump administration reached a revenue arrangement. President Donald Trump had already threatened to impose 100% tariffs on semiconductor chips, but he had promised to exempt companies that were already producing chips in the United States or plan to do so. As Taiwan Semiconductor surged, NVIDIA's stock increased. With a chip plant in Arizona, Taiwan Semiconductor, a major supplier to NVIDIA, has been increasing its domestic chip production in the United States. Recently, NVIDIA's stock hit a record high of 183.88. Following the resumption of trade negotiations between the United States and China, the stock surged. There were the makings of a deal with China, according to Treasury Secretary Scott Bessent. According to an unnamed source cited by Reuters in late July, NVIDIA ordered 300,000 H20 chips from Taiwan Semiconductor, increasing its stock of 700,000 processors. Citing research firm SemiAnalysis, the report stated that NVIDIA sold approximately 1 million H20 processors in 2024. Meanwhile, Trump announced an AI action plan to strengthen the U.S. AI infrastructure. NVIDIA's stock did not rise in response to Magnificent Seven-leader Amazon's spending intentions. In the second half of 2025, the e-commerce giant estimated that it would spend about $60 billion NVIDIA chips will account for a sizable portion of that expenditure. Microsoft stated that it anticipates spending more than $30 billion in the current quarter, while Meta Platforms previously disclosed midpoint spending intentions of $68 billion for the entire year, in part to fulfill the needs of our artificial intelligence efforts, according to CNBC. NVIDIA's stock surged to all-time highs, helped in part by Taiwan Semiconductor, a chip maker, announcing impressive earnings and improving its outlook for the entire year. Additionally, NVIDIA surpassed industry giants Apple and Microsoft to become the first business to reach a $4 trillion market capitalization. Chip lithography gear manufacturer ASML delivered a beat in earnings while warning that tariffs will negatively impact its outlook, indicating some prudence from the chip industry. Because of NVIDIA's undisputed leadership in the artificial intelligence revolution, many analysts predict higher valuations in the future. Morgan Stanley analysts maintained their overweight rating on NVIDIA stock, but just increased their price objective from 170 to 200. Ananda Barua of Loop Capital had previously set a $250 price target for the chipmaker, corresponding to a $6 trillion market capitalization. Citi analysts kept their buy rating on the stock and increased their price objective from 180 to 190. By 2028, they predict that the entire addressable market for AI chips utilized in data centers would have grown to over $500 billion because to growing need for AI. Additionally, Mizuho raised its NVIDIA price target to 185. According to Mizuho Securities semiconductor researcher Vijay Rakesh, there would be 5.3 million shipments of AI accelerators this year and 6 million in 2026. He said meanwhile that if NVIDIA moves to air-cooled technology, its next-generation Rubin server, which it says is 3.3 times faster than Blackwell Ultra, could result in even higher sales. According to the analyst, such a transfer would enable it to access a greater share of the data center industry. Currently, Rubin is intended to be liquid-cooled. Rakesh has given the stock of NVIDIA an outperform rating. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. One major question may dominate NVIDIA's next earnings day. Will China be included in its outlook? We think China would add an extra $203 billion in revenue if NVIDIA included it in its guidance, KeyBank Capital Markets analyst John Vinh stated in an interview. Due to the high demand for NVIDIA's Blackwell GPUs, Vinh anticipates robust Q2 performance. However, he cautioned that given the uncertainties surrounding U.S. export licenses to China, projections for Q3 may be modest. Given NVIDIA's pivotal role in the AI revolution and supply-demand factors that continue to work in its favor, KeyBank maintained its overweight rating and raised its price target from $190 to $215. Without China, NVIDIA's growth trajectory appears to be stable in the near future. According to Vinh, the supply of NVIDIA's Blackwell B200 GPU increased by 40% in Q2 and may increase by an additional 20% in Q3. NVIDIA's leadership in AI chips is being strengthened at the same time by an increase in shipments of the more sophisticated Blackwell Ultra B300. KeyBank increased its prediction for full-year shipments of NVIDIA's GB200 rack-scale AI systems. The company now anticipates shipping 30,000 units this year, up from 25,000 in the past, citing better supply chain performance and higher yields. KeyBank now believes that NVIDIA will not include revenue from China in its forecast. That's similar to Advanced Micro Devices' strategy, which excluded China from its outlook earlier this month due to the same regulatory uncertainties. NVIDIA is greatly impacted by China. KeyBank exceeded the $45.7 billion average on Wall Street by increasing its Q2 revenue projection from $45.1 billion to $47.1 billion. It increased earnings per share from $0.99 to $1.05, which was somewhat more than the $1 expectation. However, given China's push for domestic AI chips and NVIDIA's agreement to pay the U.S. government 15% of Chinese chip sales, the business is probably going to take a more cautious approach to its revenue projections. In contrast to the consensus of $52.6 billion, KeyBank reduced its revenue projections for Q3 from $53.5 billion to $50.4 billion. The street's consensus for EPS was $1.19. However, it was cut to $1.14 from $1.22. Longer ahead, KeyBank raised predictions for better rack shipments in 2027 due to increasing spending by hyperscalers like Amazon, Microsoft, and Google, while lowering fiscal 2026 forecasts on China uncertainties. Wall Street is still optimistic. NVIDIA was just dubbed the market's most undervalued mega-cap company by Morgan Stanley. Its stock has increased by over 35% over the last 12 months and by over 30% so far this year. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Correspondent. We have got the Dow actually staging somewhat of a rebound, holding its head above water right now, but the S&P 500 still down about 0.2%. What are you watching as far as the levels on that one?
Yeah, well, Sam, I mean, we got fairly close to going from red to green in the S&P 500 here. So you are starting to see maybe some of these tech stocks, the communication services stocks actually catching a bid here. And hopefully we're able to actually see some follow through. If you're kind of looking at the morning levels for today, we kind of saw this 63.70 area as a potential area of support. We were unable to really kind of hold through it. We kind of meandered there for about maybe 20 minutes, 30 minutes or so. And then we started seeing that flush to the downside and really seeing capitulation once the market got to around 63.40, 63.45 or so. And we have seen some buyers really trying to step in, broke above that 63.70-ish area, came back, retested it, and now we are trying to go above the 6400, which we are just doing that right now, which is going to be very key. Now, if we continue to see a move to the upside here, just going off the morning levels and the early flows, 64.30, could it be possible? Anything could be possible in a day like today. But if you're kind of looking at the options flow just for the volume for today, we are kind of hitting the upper end of the resistance potentially. The 6400 level has now been in key area of resistance for this market, and you could actually look at around that 6410-ish area as your potential breakout level to the upside. So another 10 points from here just based on the options flow alone, but you could have once again an aggressive move or even a breakdown kind of going into the close. But overall, we're holding up. You started seeing a development with that 5-minute chart here where we started making higher lows. That's going to be key, and what you do not want to see going into the close is pretty much us breaking the last higher low, which was 63.70. So there's confluence with not only the technicals right now, but also just the options positioning. Let's see what we can do from here. But this is a huge win for the bulls, in my opinion. Even if we close at these levels fractionally down based on where we were at earlier on in today's session, just kind of shows that we're trying to hold key moving averages like the 20-day moving average, which is sitting at around 63.80-ish, give or take. And you have a lot of stocks that are also testing either their 20-day or 50-day moving average when you're looking at communication services and technology stocks. And that could also be another reason why companies like a Microsoft, if you will, or others in that Mag 7 might be trying to see a little bit of a rebound over the next session or so. So overall, actually a really decent day, and we might be hitting an area of resistance. Maybe we're able to squeeze a little bit more out of this market and go positive. That would be ideal.
Yeah, it certainly seems to be a bit of a case of a push and pull, and certainly that pull being the struggling tech stocks, which makes up for just such a big part of that index. I'm just wondering, you mentioned a couple of sectors that had been actually, a bit of a standout. We're actually in the green when you break down sectorally. I'm just wondering the chart of the SPX versus the number of stocks above their 50-day moving average, how you're looking at things there.
Yeah, definitely. And actually, we only have 3 stocks or 3 sectors in the red so far. This is actually a very interesting development. If we're looking at a comparison between the amount of stocks above their 50-day moving average and the S&P 500, and this is why under the surface, this is not so bad. If you kind of look at the overall development here, we have the S&P 500 moving to the downside, but you actually have the percentage of stocks above their 50-day moving average actually increasing. This is something that rarely actually does happen here. And if we are able to kind of sustain these current levels, maybe we do pull back a little bit for the S&P 500, but this broadening trend kind of continues. You could actually make the case that this broadening out, or the other stocks or the other sectors that don't get that much love and attention when it comes to the media, might be the ones that actually try to hold us up here. I don't want to kind of dampen the fact that we still have seasonality concerns that we need to be focused on. Obviously the end of August and then going into September, where volatility usually does move a little bit higher here. But it is nice to see the fact that stocks just in general, if you're looking at the broader index itself, are still trying to stage some gains here as communication stocks and technology stocks kind of take a little bit of a breather. And once again, these moving averages, like the 50-day moving average for some of these mega cap names, could be a very key area of support. A lot of them have been holding that as an area of support since those April 7th lows that we've had, those tariff lows. So very interesting development, but this is a divergence that we have seen that we really don't see that often, where once again, amount of stocks in the S&P 500 actually making meaningful gains to the upside here, recapturing some moving averages, while the S&P 500 is kind of cooling off.